Hey everyone, welcome back to our channel where we break down the numbers behind the headlines so you can make smarter real estate decisions. Today, we're tackling one of the biggest questions people are asking across South Florida right now. Will home prices drop or stabilize in 2026? With mortgage rates staying higher for longer, more homes sitting on the market, and buyers feeling stretched, it's a fair question, especially if you're thinking about buying, selling, or relocating. You've probably seen the headlines. Prices are coming down. The market is cooling. A crash could be coming, but headlines don't tell the full story. So in this video, we're going to cut through the noise and look at real data from trusted sources like MIAMI Realtors, Realtor.com, Y-Charts, and the St. Louis Federal Reserve. No hype, no fear-based predictions. Just facts, context, and what they actually mean for South Florida in 2026. Let's get into it. Before we can talk about where prices are going, we need to understand how we got here. South Florida's housing market, including Miami, Fort Lauderdale, and West Palm Beach, has been one of the strongest in the country for years. Why? Sun and lifestyle, strong job growth, international demand, and an ongoing wave of people relocating from higher tax, colder states. But 2025 marked a noticeable shift. According to Florida's House Price Index, tracked by sources like Y-Charts and the St. Louis Fed, statewide home prices dipped 1.9% from the second quarter to the third quarter, dropping from $546.47 to $536.07. On a year-over-year basis, that translated to about a 2.3% decline as of September 2025. Now, that's important because this wasn't a crash. It was the first meaningful pullback after years of rapid appreciation. So what caused it? The biggest factor was affordability. Mortgage rates hovered between 6.5% and 7% for most of 2025, which significantly reduced buying power. Monthly payments jumped, and many buyers simply hit pause. At the same time, inventory began to build. Single-family homes climbed to about a 6-month supply, which is considered a balanced market, not favoring buyers or sellers. But condos and townhomes were a different story. Inventory in that segment ballooned to nearly 12 months of supply, officially tipping it into buyer's market territory. And condos deserve special attention here. Since 2021, HOA fees have increased roughly 45%, driven by new Florida regulations on insurance requirements and fully funded reserves. Changes accelerated after recent hurricanes and safety reforms. That combination pushed some buyers out of the condo market entirely and forced sellers to adjust expectations. Despite all of this, sellers weren't panicking. Why? Because equity levels remained strong. Most homeowners in South Florida still held over 50% equity, meaning there was no pressure to sell at a loss. And that's reflected in the data. Distressed sales, including foreclosures and short sales, remained below 1% according to MIAMI Realtors. That's a critical point. No surge in distress means no forced selling and no fire sale pricing. Looking specifically at South Florida in late 2025, median single-family home prices held steady around $630,000. Median condo prices softened to about $450,000. High-income buyers from industries like tech, finance, and international business continued to support demand, especially in desirable neighborhoods. But average buyers felt the squeeze and activity slowed. So what we're seeing isn't collapse, it's recalibration, which brings us to the big question. Does this slowdown signal a larger price drop ahead, or are we moving toward stabilization in 2026? All right, now let's cut straight to what the experts are actually forecasting. Not opinions, not social media guesses, but data-backed projections. And here's the headline most people don't expect. There's no major drop predicted for South Florida in 2026. What most forecasts point to instead is stability, with modest growth in certain segments. Let's start with Realtor.com. In their 2026 National Housing Forecast, adjusted for major metro areas, the Miami-Fort Lauderdale West Palm Beach market is projected to grow by approximately 1.1%. That might sound modest, but in a high-priced, highly competitive market like South Florida, even low single-digit growth signals strength. Why does South Florida continue to outperform some other Florida markets? A few key reasons stand out. First, land here is finite. We're bordered by the ocean, protected land, and already developed urban cores, which naturally limits how much new inventory can come online. Second, demand from high-income buyers remains sticky. Executives, remote professionals, international buyers, and retirees with strong equity aren't disappearing just because rates are higher. And third, new construction hasn't kept pace with population growth, especially in desirable, established neighborhoods. Now let's look at Miami Realtors, who track this market closely on a local level. Their outlook from early 2025 projected about 4% growth in single-family home prices, and their updated guidance suggests that momentum carries into price stability or slight appreciation in 2026. They're also forecasting a 5% rebound in sales activity, largely driven by expectations that mortgage rates gradually ease toward the 6% range. That matters, because even small rate improvements can bring sidelined buyers back into the market. Other industry reports support this outlook. Norada Real Estate points to continued price firmness, especially in South Florida, citing ongoing job growth in tourism, logistics, and international trade. Discover South Florida highlights renewed investor interest as cap rates stabilize and rents remain resilient. And South Florida business journals recently referenced realtor reports suggesting that home prices in the region could continue to climb into next year, even as other markets remain flat. Now, let's talk about condos, because this is where forecasts get more nuanced. Condo prices are expected to remain more stable, with the potential for slight softening if inventory stays elevated, particularly in older buildings with higher HOA fees. That said, no major plunge is predicted. Current projections suggest single-family home medians holding above $600,000, condo and townhome medians ranging between $420,000 and $450,000. In other words, this isn't a falling market. It's a plateau with gentle upward movement in well-located, well-maintained properties, and more pressure on outdated or poorly managed inventory. So when you zoom out and look at the data as a whole, the message is consistent. Experts aren't forecasting a crash. They're forecasting a market that's cooler, steadier, and more selective. And that sets the stage for the most important question of all. What does this mean for buyers and sellers heading into 2026? All right, now let's geek out on the data for a minute, because when emotions run high, numbers tend to tell the clearest story. Let's start with the house price index. Statewide, Florida's price index has corrected slightly, which we talked about earlier. But when you zoom into South Florida metros, the picture looks different. According to Zillow's Home Value Index, Miami home values have remained near historic highs heading into early 2026. That matters because even during a period of higher rates and slower sales, prices haven't collapsed. Looking at historical medians helps put this into perspective. Back in 2024, median single-family home prices in Miami hovered around $550,000. By mid-2025, prices peaked closer to $630,000, driven by strong demand, limited supply, and a surge of relocations. Since then, we've seen stabilization, not a sharp drop. Prices have leveled off, holding much of those gains rather than giving them back. That's not the behavior of a market in trouble. Now let's talk about inventory, because this is where balance shows up most clearly. Projections for 2026 put inventory between 5.1 and 6 months of supply. That's important. A market with under 4 months favors sellers. Over 7 months typically favors buyers. 5 to 6 months? That's a balanced market. It means buyers have time to think, negotiate, and compare options. But sellers aren't forced to slash prices just to move property. Sales activity supports that story too. Several reports showed sales surging roughly 14% in late 2025, signaling renewed momentum as buyers adjusted to rates and affordability expectations. And according to Florida Realtors, the state entered 2026 on much firmer footing than earlier in the year, helped in part by modest rate cuts and improved consumer confidence. Now, compare this to the 2022 frenzy. Back then, prices in some South Florida neighborhoods nearly doubled in a very short period of time. Homes sold in days. Offers came in well over asking. Inspections were waived. That wasn't sustainable. What we're seeing now isn't a bubble bursting. It's a normalization phase, a cooling off from extreme conditions, followed by stabilization. In economic terms, this looks far more like a soft landing than a hard correction. And historically, soft landings tend to reset markets, not break them. Which brings us to the next logical question. If prices are stabilizing instead of falling, where does that leave buyers and sellers in 2026? That's what we'll break down next. So at this point, a reasonable question is, if affordability is still tight, inventory is higher, and rates aren't exactly low, why aren't prices dropping? It comes down to a few powerful forces working together. The first major driver is mortgage rates. According to Realtor.com, rates are expected to average around 6.3% in 2026, down from the peaks we saw throughout much of 2025. That may not sound dramatic, but in real terms, it matters. Even a small drop in rates improves monthly affordability. It pulls sidelined buyers back into the market. It increases transaction volume without flooding supply. The result isn't runaway price growth. It's more activity at stable price levels, more buyers entering the market, but not enough to spark bidding wars like we saw in 2021 and 2022. The second factor is supply. And this is where South Florida is different from many other markets. You simply can't build endlessly here. We're bordered by water, protected land, and fully developed urban areas. Zoning restrictions are tight, and hurricane-resistant construction adds significant cost to new builds. That naturally limits how fast new inventory can come online. On top of that, international demand remains strong. Cash buyers from Latin America and Europe continue to view South Florida as a lifestyle destination, a financial hedge, and a tax-advantaged market with no state income tax. That inflow of capital helps put a floor under prices, especially in prime locations. The third driver is the economic backdrop. South Florida continues to see job growth in logistics and trade, healthcare, tourism, and emerging tech hubs, including areas like Wynwood. At the same time, most sellers are equity-rich. As we mentioned earlier, many homeowners hold substantial equity after years of appreciation, which means they're not under pressure to sell at a discount. That lack of forced selling is critical. No forced selling means no sudden price collapse. Of course, no forecast is risk-free. If mortgage rates stay elevated longer than expected, demand could soften again. If another major storm significantly disrupts the insurance market, condos, especially older buildings, could face additional pressure. Those are real risks, and they're worth watching closely. But when you look at the baseline data, most projections land in the same place, a market that stabilizes, with prices inching up roughly 1% to 4%, depending on location, property type, and condition. Not a boom, not a bust. A recalibrated market finding its footing. So after all the data, forecasts, and context, the real question becomes, who actually has the advantage in South Florida in 2026? Buyers or sellers? The honest answer? It depends on who you are and how you play it. Let's break it down. If you're a buyer, 2026 gives you something that was missing for years: leverage. Right now, roughly 20 to 30% of active listings are seeing price reductions, according to market reports. And that trend is expected to linger into 2026. That tells us a few important things. Sellers are more flexible than they were in recent years. Overpriced homes are no longer flying off the shelf. Negotiation is back on the table. Buyers can ask for price adjustments, closing cost credits, repairs, or concessions. That said, this isn't a market where waiting forever pays off. If mortgage rates dip further, especially into the low 6% range, demand could pick up quickly and inventory could tighten again in desirable neighborhoods. So for buyers, the strategy is patience without paralysis. Be prepared. Know your numbers. Move when the right opportunity appears. For sellers, the days of name your price are gone. But that doesn't mean it's a bad time to sell. It means expectations need to match reality. Homes that are properly priced, well-staged, in good condition are still selling, especially single-family homes in strong neighborhoods. That segment continues to outperform because demand is deeper and inventory is more limited. Condos, on the other hand, require a different approach. In 2026, condo sellers often need to price more aggressively, be transparent about HOA fees and reserves, offer incentives to stand out. The sellers who succeed are the ones who understand today's buyer mindset and price accordingly from day one. For investors, 2026 is about precision, not speculation. Cash buyers continue to have an edge, especially when it comes to off-market opportunities, properties with longer days on market, situations where sellers want certainty and speed. Returns aren't coming from appreciation alone anymore. They're coming from smart entry prices, strong rental fundamentals, and careful underwriting. The upside is still there, but it rewards discipline, not hype. In 2026, the winners aren't buyers or sellers by default. The winners are the ones who understand the data, adjust their strategy, and move with intention. And that's exactly the kind of market South Florida has become. Whenever people start asking, are prices about to drop? There's one comparison that always comes up: 2008. But here's the truth. Today's market looks nothing like 2008. Back then, South Florida was dealing with massive oversupply, speculative flipping with no income verification, adjustable rate mortgages resetting all at once, distressed sales flooding the market. When demand dried up, prices fell 40% or more in some areas. That was a system built on leverage and speculation. Now compare that to where we are heading into 2026. Distressed sales, still under 1%. Homeowners today, locked into fixed-rate mortgages, sitting on historically high equity, not forced to sell. Most sellers in South Florida have 50% or more equity, which gives them options, and options prevent panic. The 2020-2022 boom was intense, no question. Prices jumped fast, demand exploded, inventory vanished. But what we're seeing now isn't a crash. It's the market cooling back to reality. This is what normalization looks like: more inventory, longer days on market, price reductions instead of fire sales. Prices flatten before they fall. And in strong markets, they often don't fall much at all. South Florida has something many markets don't: limited land, constant population inflow, global buyer demand, no state income tax. Those fundamentals didn't exist in the same way in 2008. History shows us that when markets with strong demand slow down, they pause, they don't collapse. So when you hear fear-based headlines, remember this: 2008 was about excess supply and weak borrowers. 2026 is about higher rates and rebalancing. Very different story, and that's why history suggests stabilization, not a sharp drop, is the more likely path forward. So the real question isn't just, will prices drop or stabilize? It's, what should you do with this information right now? Here's how smart buyers, sellers, and investors are positioning themselves heading into 2026. First, run comps weekly, not monthly. Platforms like Zillow and Realtor.com update faster than most people realize, and watching price adjustments over time helps you spot motivated sellers. Second, get fully pre-approved, not just pre-qualified. In a stabilizing market, sellers are choosing certainty over top dollar. A clean offer with solid financing still wins. Third, track mortgage rates weekly, not daily. Rates are expected to ease gradually, not crash overnight. Timing small dips can save you tens of thousands over the life of a loan. And finally, work with a local agent who has access to off-market opportunities. In South Florida, some of the best deals never hit public listing sites, especially with condos, downsizers, and estate sales. If you're selling in 2026, pricing matters more than ever. Homes priced correctly from day one. Get more activity, face fewer reductions, protect long-term value. Overpricing and testing the market is what leads to stale listings. Presentation counts too. Clean, staged, well-maintained homes still command strong numbers, especially single-family properties in good school zones. This is not a speculative flip market. Cash buyers and patient investors are winning by targeting properties with price reductions, running conservative rent assumptions, factoring in insurance and HOA increases up front. If the numbers work now, they'll work long-term. So, will South Florida prices drop or stabilize in 2026? All the data points to the same conclusion. Prices are stabilizing. Modest 1–4% growth is likely, no major drop in sight. This is a market that rewards preparation, not panic. If you're thinking about buying, selling, or investing in South Florida, the smartest move you can make is understanding your specific micromarket, not just the headlines. If this breakdown helped you, hit like, subscribe for more data-driven South Florida real estate insights. Drop your questions in the comments. Thanks for watching, and I'll see you in the next one.